following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time once again for the old Option Block, the program where we break down all the latest news and developments and strategies and trading tips and education and all that fun stuff from the world of options and wrap it up into one nice, tidy little package and present it to you with a nice little bow on it, nice little end-of-the-year present for all of our fun listeners out there in Option Block land. My name is Mark Longo from theoptionsinsider.com, as well as from the old Options Insider Radio Network. And joining me on the old all-star panel today, first off, beaming in from the great, lovely, scenic, sunny, tropical even state of Maine, none other than the Rock Lobster himself, good old Andrew Giovinazzi. Mr. G, welcome to the program, sir.
Thank you for having me. This the highlight of my day so far.
Isn't this the highlight of every day that you do this show?
It is, but today especially because my chainsaw was stolen, and I'm upset.
Rampant crime out in Maine. I love it.
And the small town crime. And I have to go to a pawn shop now probably to find it because, there's my chainsaw.
I imagine all three policemen in your town are on the case.
Pretty much. It is right now, I would call it. It is close to Grand Theft Auto as you can get in small town.
Like, wait a minute, we got to dust off the crime ledger. We have a crime. You almost made it the whole year.
We have a crime.
well, someone stole your other neighbor's maple syrup earlier in the year, so maybe that was the only other crime of the year they had to deal with. So pretty sleepy town out there from a crime perspective.
A little bit, yep.
All right, and also joining us, speaking of sleepy little towns from the lovely scenic province known as scenic and lovely St. Charles, good old Uncle Mike Tosaw from RCM Wealth Advisors. Mr. Tosaw, a.k.a. Uncle Mike, welcome back to the show, sir.
Always good to be here broadcasting live from the bustling metropolis of St. Charles, Illinois.
Bustling, all 80 people, really moving around a lot. Gives that impression of activity.
There you go.
And last but not least, via the magic of this thing known as the telephone, because the Skype gods are simply not smiling on OX today, it is none other than the Viceroy, a.k.a. Alex Jacobson. Mr. Viceroy, welcome back to the program, sir.
Hey, Mark. Good to be here today.
Glad we could make it happen. And now with the gang all assembled, it's time to dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down all of the action going on in the street today. And it was a bit of a mixed bag. It was Mixed throughout most of the day. Some of the major indices were slightly up. Some of the major indices were slightly down. Some were unched. And towards the end of the day, we saw that narrative shift to the downside with the S&P closing down almost 0.5% to 1775. The Dow leading the charge down nearly 0.75 of a percentage point to 15,739. The good old NASDAQ essentially unched on the day to 39.98. VIX cash ticking up a wee bit, up about 0.1 of a point to 15.54. Maybe we'll start with you, Uncle Mike, because the Skype gods are smiling upon you. What caught your eye the most out of today's tumult in the marketplace?
Today's tumult, as they say. A few things, actually. I'm just kind of looking across it. The general things with which I look at. Apple was relatively flat, and I just got to tell you guys, in terms of financing the long put, this has been calendar spread heaven lately in the world of Apple. So
are you to the good on the cost of that put yet?
No, not even close. But in terms of where we're at, in terms of the good on the increase in the stock, that's very good.
That's true. Another definition of good, but they all work out to be pretty good in the end.
Yeah, I'm more in favor of what the account balance looks like, and so long as the bad in the cost of the long put is not too bad to make it so it's bad, then we're good. So I think, like last I looked, to give you an idea of it, we're probably from 430 to 560 in this latest Apple run. We've captured probably about 82 to 83% of the upside. Our goal has been to capture 70% of it. So from that standpoint, we're good along those lines. That's what we're very happy about lately with it.
When does the big roll-up come?
That's what we're 570 was the mark with which I've had on it. And it was 570 at the earliest. And when we got to 570, I did not pull the trigger, but we're looking to probably do a roll-up sometime soon. Just because of the fact that what we did in lieu of a roll-up was we made the time decay finance plays, so to speak, a little bit more bearish. So ultimately, just to give you an example, the ratio that I like to use on this is in units of 1,600 shares. So for 1,600 shares, we typically try to get about between 1,200 and 1,300 deltas. And with it, we still would maintain that amount of deltas, but just we would do a bearish calendar spread to allow that to happen, because obviously if you're continuing to do vertical put spreads or something along those lines, the overall position delta would not be there. So in lieu of doing a roll-up, what we've been doing is bearish put calendar spreads lately.
And that's kind of delayed the need to do this adjustment. And you're right, and that has been paying for part of that put, this aggressive doing stuff campaign you've been on of late. But of course, you have 100 points now to the downside to lock in some way, shape, or form. So now comes the great. I'm sure the clients have been calling you saying, "Hey, when's the roll up happening?"
No, it's been, why are we hedging? Why do that's kind of more.
Is it back to that now? Why are you wasting money on hedging?
How long did it take? I just got to know, how long did it take before the phone calls came in? How come we're only getting 80%?
Last week is when the first one came in, and it was almost. I wish you could see a chart of it. It was almost exactly at the peak. It was unbelievable. It almost always happes that way. But
you just fire your client and tell him to manage it himself? You're just going to say, you know what? I'm done. You figure it out.
No, it was. And I even told, it was the one client. I even called him and said, "You realize that when I got this email, I yell across the office, everybody get bearish on Apple, because this has been 100%." Perfect bearish indicator of Apple whenever clients start sending me these emails on articles on Seeking Alpha or Yahoo Finance saying this is going to come up. And I've told them about it. So if you're listening, Mr. Client.
Tell me. Screw everybody else. Let me have the phone call.
So if you're listening, Mr. Client, no hard feelings, and we had a good conversation about it too. So, but yeah.
I love that kind of client. You love a guy that's 100% wrong all the time. That's great.
Well, typically in the RCM Apple stable, it's pretty close. But they were right for getting into it in the first place. It's just that whenever the continuation calls are typically pretty almost 100%, I've found, in the retail world.
Yeah, that's been one of the more reliable indicators on Apple of late, is your client overall sentiment. And when they really start complaining about the hedging is when it's time to perhaps watch your downside out in Apple. Not to be contrarian or anything. I'm just saying.
It has to be on a continuation, though. If they're calling for a continuation of more upside to come after a big run to the upside, that's when it happens typically. So you have to get the indicator correct, if that makes sense.
I as much as I love the Apple, and by the way, Tosaw is always old-fashioned. He just likes having more money at the end of the year than he started with. I know that's a crazy concept for people, but I think that's a good one to take to heart. Trade-wise, interesting trade. Twitter. Okay, everybody blink. I think last week, $41, $40. Looks like it was going into the ash can. 55 today, 55 and a half. And it looks like the squeeze is starting to be put on this a little bit, Mr. Longo. Like the shorts, clearly a better job of engineering this IPO, and the borrow rate's getting a little higher, and the stock's getting a little squeezier, and you might see a lot more volatility and upside in this thing. So, this thing's clearly a different trajectory out of the gate than Facebook had last year.
Yeah, $3 up, $3 today, up about 12 handles over the past week. So it's been quite the ride. You're right. It seemed like it was starting to test into the high 30s range, and that seemed to be somewhat of a Facebook-like trajectory, starting to come off a bit off the peak there, and then all of a sudden, you're right, the squeeze or Twitter mania or all of the above. I don't know. Holiday got to have it. I don't know what it is that's driving it up, but probably a combination of all three therein. Really just shooting this off. Usually when we see it this aggressively over such a short period of time, you're right, it probably is some sort of squeeze at work here.
Oh, for sure. And the thing is, the borrow rate, it's not, I don't think it's impossible to borrow yet, but it looks like it's getting harder. And the funny thing is, the market's done nothing but go south this week, and this is nothing but gone up. So, and if you look at the volume, there's a lot of opening heavy buying volume. On Monday, it was up $2 on a squeeze, up $2 on a squeeze on Tuesday, and today just all by the end of the day, just another $3 up. Just squeeze, and then it flatlines. Squeeze, then flatlines. So somebody got too aggressive too early shorting this thing, and clearly it ain't no Facebook right now. Although, as Bill also mentioned, Facebook, as it gets added to the S&P 500, only being a one-year-old company, and that was good for $3 today.
Yeah, Twitter, interestingly enough, they not surprisingly, doing significant, nearly about 3x their ADV today, doing about 214,000 contracts. But surprisingly, given the aggressive of the upside move that we've seen over the last couple of sessions, you think that would be heavy to the call side, and yet puts outnumbering calls again today, about 1.3 to 1 on the put side. So that's interesting that even in this aggressive swing we've seen over the past, you think people would be looking to hedge their shorts because it's a squeeze, looking to spec on some upside deltas. Calls would be leading the charge, and yet clearly not the case. Puts still very active out there in Twitter land. So interesting balance going on out there.
Yeah, I think guys that were trying to short the stock short term are like, nah, I'm not going to borrow the stock anymore. We've seen what happens to people when they get squeezed. We see what happened to that HLF guy. We're gonna buy puts. Only lose some money if we're wrong, and not all our money.
Mr. Alex, was Twitter lighting up the tape at OX today as well?
Yeah, it was Twitter and Facebook. Tesla had a big day today here. GLUU, which got beat up quite a bit, was lighting up the tape. And interesting enough, when I surveyed the desk, they said one stock was hot today. Obviously not optionable because it IPO'd today, but a lot of folks piled in to buy Hilton right after the IPO. So that's kind of a curious event. Also got a survey today that we did of clients that Schwab takes periodically, and the overall tone amongst clients is extremely bullish. The interesting thing, the survey asks kind of two questions. What do you think the market's going to do going forward, and what's your overall confidence? And the confidence question is clearly going into a gray area, but investors were bullish but not very confident. So it sounds like there are clouds out there over what folks are thinking about going forward. And I think a lot of that has to do with, the now inevitable end of taper. But it was a social networking duo here today, both Twitter and Facebook, doing a lot of business, both in options and in the stocks.
The Hilton IPO is a weird one just because it's one of those companies that if you had asked anyone on the surface, aren't they already a public company, you would have thought that they were. Hilton just had that feeling about it that it was already a public company. But you're right. Going public recently, getting a lot of traction for a hotelier, not usually the sexier of the IPOs. Everyone loves the Web 2.0, the social media stuff. Hotels not the sexiest thing, but this IPO getting a fair amount of traction. So maybe that'll be the next hot optionable name. We'll see.
Isn't it in the movie Wall Street? Isn't that what the old stockbroker says? Fundamentals are what you need to do. Hilton and IBM were built on it. Isn't that one of the companies that he used?
Well, they were public, and then Blackstone took them private.
Oh, okay.
And now they're taking them public again.
Hilton was the hottest takeover stock in 1989, besides UAL, on the PSE floor. Sorry, I had to date myself, but that was a monster.
That was back in your 15th year of market making, was it not?
Yeah. And I remember
that was before my 15th year of life. I think I was 11 then.
It was Hilton actually was down $20 in one day when basically we had that sort of mini crash in '89. I'm sure Alex remembers this when UAL was down like $100 or $150 or something. All those takeover stocks, they just pulled the plug on the financing and everything just went whoo.
That's the day Steve Fawcett went debit.
Yes.
Yeah, and if you think about it, United then owned Weston. I think they owned Hertz and Weston. Remember, it wasn't United. They'd changed the name on it. That was the mini crash. That was Friday the 13th. The only good thing was it was an expiration. Well, not that there was a good thing, but it was an expiration Friday. It was the mini crash, and to your point, Andrew, they took $100 out of whatever the United consortium was that day. And it was interesting, though, because people who had lived through the 87 crash kind of were better equipped what to do with the volatility on that day. And I was actually in Colorado. I was at Beaver Creek at a Shearson retreat. And we were with many institutional investors who on the 13th and on the Monday after were selling significant premium on blue chips simply because they lived through the 87 crash and said, if this ever happens again and, I can sell stuff 5% out of the money for $5, I'm going to do it because at that point I'm a fundamental buyer. And fortunately, like the 87 crash, that was a short-lived crash. But it was interesting. Yeah, it was the United Airlines crash. Friday the 13th. Oh, that's tomorrow. Yeah, it was interesting.
Of course, you mentioned GLUU, too, another popular one with the OX clientele. They reported earnings before the bell this morning, and apparently the sheer pants fiasco and other things really combined to clip the wings on this one. They're closing today down about 8 handles, or about 11.5% on the day, closing right around $60. This is one of the few examples in recent, at least in this quarter, of premium buyers actually doing fairly well. That 68 straddle went out at about $5 last night, so this thing moving about 8 handles. You're $3 to the good on that weekly straddle. But again, the narrative for most of this quarter so far has been premium sellers being the ones who are taking home the gold. The buyers are just getting run over left and right. So I'd imagine, you said GLUU was pretty active today. Sheer pants really driving some volume in the land of GLUU.
Yeah, Tesla was active today. It was interesting because we had, it wasn't so much today, but we had a number of customers playing in the weekly puts at the beginning of the week after, the 4 down days we had last week. And Tesla this week has had kind of real relative strength, much like the Twitter and Facebook, which kind of leads you to believe that it's some of the momentum issues that, even with the market sell-off, are getting people active in them, people buying, not on the dips, but on the assumption that momentum will come back.
And, of course, some action out there in their metals lands as well. Uncle Mike, both of your favorite shiny, sparkly metals taking it on the chin again today. We saw your buddy, Mr. Rogers, coming out today and saying he was more of a fan of silver than gold today. Both GLD and SLV taking it on the chin yet again. What's your take? What stuff are you doing out there in metals land?
Well, half of my stuff is in cash, which is nice because I haven't been in silver for several weeks now, which has been very nice. But right now with gold, I'm going to save that for the strategy block because I have something I want to expand upon in the strategy block with what I did in gold today. So sorry to be a tease, but I'm going to tease.
You dirty tease you.
I was about to say, is it possible for an ex center in football or whatever Mike was to be a tease? Is that possible?
You just saw it in action, sir. Dirty Uncle Mike, the dirty tease that he is.
Well, it's funny because when my wife and I were dating, she goes, well, you realize I'm a nurse and sometimes I see men's private parts. Are you okay with that? And I said, well, back in my former job, I had men touching my private parts very frequently. And
it must have been a scintillating first date.
Who's talking about all the wrong private parts?
Who touches more men's private parts? That's the Uncle Mike Tosaw.
Those quarterbacks, I tell you.
Aye.
All right, before we dig this hole any further, we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we break down all sorts of funky and unusual things besides all the private parts that Uncle Mike is touching on his dates with his wife. All right, for kicking it off today, we have good old CYTRX Corporation, CYTRX, not the Citrix you may be otherwise familiar with. Ticker symbol CYTR. They closed today at $6.12, up a whopping $2.10, or 52.5%. Just some serious movement out here in CYTR. Not surprisingly, given the aggressive move to the upside, we saw some call buyers here in CYTR. In particular, we saw people piling in to the Jan 5s. They went up in a block earlier today of about 550 for a whopping array of prices, as you might imagine, given the fact the underlying is moving so heavily, from about 35 cents up to 70, a total of nearly 1,000 going up on the day today. But that wasn't the only trade, not by a long shot. This thing really just putting up some numbers today, usually doing 362 contracts a day, doing 14,000 today. So as you might imagine, new open interest across the board, 1,000 of the March 5s, 3,800 of the D's 5s. Looked like someone closing out a previous position on that strike. They had about 3,400 open on the D's 5s and rolling out perhaps Jan or March or indeed even out to June, 400 of the June 5s going up as well. So just paper out across the board, paper for days. What's your favorite amongst this explosion of paper in CYTR, Andrew?
My favorite when I first looked at this, the stock, those calls were from 35 to 70, and they closed like $1.75. So that was kind of a home run for that guy. He made $1 50 times. That's not too bad. Remember?
Yeah, there are worse trades.
The hard thing for me at the beginning was making sure, like, there was that D5, definitely looks like they were closing, probably worked out well for them. But I'm not quite sure. I thought that might have been an overrider, to be honest, a buy rider, because it looks like they were buying to close. But, be that as it may, right? Because if it's a closing trade and there's open interest and you're buying, then you're covering a short. The Jan 5s are the ones that are actually just straight out spec, it looked like. They're buying. But hard to believe his stock was up another, buck or something after that. So at least, another $1.40. So whatever's going on in a biopharmaceutical research company specializing in oncology, how many of those do we see?
Get about 8 of those a day, it seems like. Yes, whenever you see the biotechs, they are prone to these aggressive moves, and
that is for the seller beware in a biotech company.
Yes. Indeed.
Oh, and you say the volatility is 200. The problem is the stock moved 52% today.
No. Sell everything you can in those companies, because that's how I get business after people do it.
There you go. I like it. Blast out some straddles, and then just go home, and in a month or two you call Uncle Mike.
I love it.
That the straddle and that $1 straddle and the $4 stock will ever be worth it, and then it goes to $9.
Speaking of worthless stocks, next up in the old odd block, a newcomer to the odd block. This is Glu Mobile Inc. Ticker symbol GLUU, closing today at a whopping $3.44. Unched on the day, but not unched from an options volume perspective. No, sir. This is the name that does about 2,500 contracts a day. That's pretty beefy for a little name like this. And they did about 7,200 contracts today. And not surprisingly, it seems to be the narrative of the day here in the odd block. A lot of that paper coming in some call buying activity, in particular, rolling on out to the March 4 strike. We saw 5,500 total of these calls going up for, including blocks earlier in the day, around 50 cents. Looks like the bulk of them went up in around that price range. Open interest, about 2,200 contracts. So this is a lot of opening paper here on this strike. Interesting stuff. Looks like they weren't tied to stock. So it looks like someone coming in and positioning perhaps some fresh paper here on the out in March on the 4 strike. Looking at some recent chart here of GLUU. They flirted with that 4 strike back in the end of October, and that's really about it for the previous 6 months or so, about pretty much the previous year. So this guy, I guess, hopefully betting that they retrace their steps and perhaps flirt a little bit more aggressively with the 4 strike. What's your take here on this call buying out here in Glu Mobile, Mr. Andrew?
Yeah, I agree. I think it's from what it looks like they're just buying calls. On the heels of that SoftBank, Zynga lifted after that. All these little mobile game app makers, everybody thought they were kind of dead. Then all of a sudden, they realized they still have 20 or 30 million eyeballs. There's some value there, and I think somebody's looking. And the options are, I would say, the stock doesn't move very much, and people are paying around 100 volatility for them. Doesn't mean much in a $3.50 stock, but it's still, it's sizable premium. I mean, you could buy GLUU and just sell the 4 call out to March and get a pretty good yield, a lot better than you could with just about anything else. So, you pick up almost 50 cents on a $3.50 stock for a 4-month hold. That's pretty good. That's a lot of, to me, it just feels like a lot of speculative buying. I mean, people are definitely looking for, they're looking for $5, $6, $7 by then.
Yeah, that's always cracks me up about these aggressive upside buyers, is that there are so many other ways they could be gaining exposure and capturing perhaps some yield in the process, and yet they just love piling into that upside. So you're saying Glu Mobile makes games, so they don't make little portable glue packs so you can take in your pocket and just go around with them.
Exactly. They do not make those portable glue sniffing packs that you see so many people in Chicago using.
Huge in Chicago. Huge. Don't leave the house without my portable glue pack. You never know. You never know when it's going to come.
After they're trying to figure out how to fix their pension problem. So GLUU was doing a huge business selling packs of glue to the legislators in the Chicago area.
All right, kids, don't sniff glue. Instead, just listen to the odd block as we move on to our next name. I believe another newcomer. This is Quest Diagnostics Inc., ticker symbol DGX. Closing today, $53.81, down about $1.50 or about 2.5% on the day. This is another one. It's not bad for an odd block perspective, about 1,300 contracts a day, doing 18,000 today. And we're flipping the script here. No more call buying here. We actually saw people piling in to the puts, particularly some longer-term puts out in May. And someone just had to get these, and they had to get a ton of these May 45 puts. When we wrote it up this morning, about 7,000 had traded on splits at a variety of prices. And we saw a total by the end of the day, another 5,000 going up, or nearly 6,000, for a total of nearly 13,000 on that strike, all on an open interest of 28 contracts. Looks like it's a long underlying holder gobbling up a ton of protection. We didn't see any stock going up with this, so that would be the outright guess unless someone's really hardcore specking. What's your take here, Senior G, on these puts out in DGX?
Well, whenever you put up 14,000 contracts and there's 28 open interests, it's like, you got to put on your hat.
Yeah, that registers the unusual meter.
It does. That is obviously a big speculative buy. People buy puts because they think stocks are going to go down. DGX has already made a big run. We actually looked at it the other day. People were planning on buying some calls after it got sold off because it's trading at its year lows. It just has the feeling, the stock's trading at its year lows. It's a relatively stable type company. So they're going to buy some put protection, essentially for what the dividend stream is, and then go buy the stock. That's what it looks like. But again, without seeing the stock buyer, I can only, of course, speculate, which is what we do here on unusual activity on the out block.
We should just call it the speculation block, and then everyone would know what we're about here on the old show. The name does seem kind of familiar. I think we did on them once before here on the show recently. All right, and last but not least, we're going to close it out here with another name that everyone really follows on a daily basis. Of course, I'm talking about Beam Inc. Need your BEAM quote on a daily basis, otherwise you're really not well-versed on what's going on in the marketplace. Beam closing today, $65.94, down about $1.44 on the day. This is the name that does about 1,300 contracts. Again, ADV doing about 7,500 here in Beamland today, and a lot of that coming, once again, going back to the old upside call script. People coming in to the March, looks like the March 72 halves were the strike du jour and the option du jour today out here in Beam, doing about 3,000 contracts on a range of prices around $1.25 or so. They've since come off a bit. They're offered at $1.20 now, so of course not surprising the names come off aggressively throughout the day. But they were lifting offers throughout the day. It was kind of interesting to see in kind of little scattered, some one lots going up throughout the day. A lot of weird scattered size on this one. People coming in and lifting offers. It's kind of an odd execution. Wouldn't you agree, Senior G? You are muted, Andrew.
Yeah, no, this is, buying real out of the money calls. It's like a 12 volatility stock. So, yeah, sure, Beam could get back up there, but man, you are hugely bullish. That's all I got to say. Hugely bullish. Could be a newsletter. But it was a very, that type of paper. But come on. If you're a newsletter writer and that's the best you can come up with, having somebody pay twice realized volatility for a month call that's out of the money.
I didn't say it was a good newsletter. I just said it was a newsletter. That certainly has that newsletter type of paper feel to it. The one lots and the scattered small
if Beam
stuff.
trades 70, you'll probably make some money on these calls for sure. They'll probably double. So, but your Beam's got to make a move. So of course tomorrow we'll watch it. Beam gets taken over for $80 a share. We all look like idiots.
If this guy's got 3,000 readers and they all piled into this one, he may have a lot fewer in the coming next quarter's newsletter. When all is said and done, who knows? This guy could be a genius. Maybe we'll file this one in the to be watched as well, just to see how well this scattered one lot paper performs here going in. We got some time on this one. This is up in March, so we got some time for this one to play out. But interesting nonetheless. All right, and that is going to do it for the old odd block. And now we're going to keep on rolling right on into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. Alex, This is the portion of the show where you usually take us behind the scenes into the world known as OX. You were saying earlier on the show, a lot of action in Twitter, a lot of action in Facebook, also some interesting piling into the land of Hilton over there at OX. What else caught your eye over there in OX land today?
Yeah, it was a relatively, I hate to use the word ordinary day until the last 10 or 15 minutes. The phones were ringing all day, though. The desks were all busy and, kind of hanging over the divider and listening to what was going on today. The big action was in social networking. I was a little shocked about the amount of Hilton calls they got, but they were getting them. The other thing is one of our futures analysts had put out a letter the other day saying that he thought gold was putting in a bottom, which means, of course, it dropped 30 points today, which was kind of interesting. But this time of the year, still relatively quiet trading. We've had 8 days down out of 9, which is uncharacteristic for this time of year. There's generally some seasonal strength this time of year. But all in all, it was kind of an interesting dichotomy, a down day and a handful of momentum issues that were actually doing pretty well.
Hot times over there in OX, and we'll have to stay tuned. I haven't seen any notices on when Hilton will become optionable, but I'm sure that will be the next round of questions we'll get from our listeners. When can I trade options on this guy? So we'll stay tuned to that, listeners, and as soon as we know, you shall know here on the show as well, probably sometime in the next couple of weeks. So stay tuned for that, provided it meets all the criteria we discussed earlier about the Twitter options launch. Then we can get some Hilton options action going today or going sometime soon, hopefully in the next week or two. All right, thank you for that, Alex. Now we're going to keep on rolling right on into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is, of course, the portion of the show where Uncle Mike comes on down from the mountain, stone tablet, and smoking jacket in hand to dispense some wit and wisdom. And we're all very excited here, very pumped to get to this one because he teased it, seems like days ago now. So we really need to see what you have cooking out there in the land of the metals. Take it away, Uncle Mike.
All right, so I'm coming down with the smoking jacket and the stone tablets. So I got the snooty British columnist along with Moses. I got to be honest with you, Mark. I don't know where to go with that one. So
that's about
anyway, right. With that, I want to go through the adjustment with which I made in my GLD position today. And for the ratio with which I'll use, it's for the clients that we have that are long-term bullish on gold, which, by the way, I still am, but still yet short-term cautious by hedging this. And I want to go through what we're doing and why we're doing it and when we did it today. So to give you an idea of it, just looking back to the summer when we re-entered this position around the 123 level, we're probably about break even in terms of our hedges. So we haven't made money to the downside on GLD, but in fairness to the position, it's down $5. So it's one where we're close to breaking even. I think we might even be a couple of pennies ahead. I don't know. I'd have to look at it to tell you the truth. So with that, going into today, long 100 shares of GLD, long the January 115 put. GLD going into today was trading at around the 121 level. And we were also long the January, December week 2, so the January and then the December week 2, the front week, put calendar spread at the 121 level. And then the concept behind that was to get it to where in lieu of doing a collar, we're going to do long stock, long put, and then long calendar spread to create the theta to finance the cost of the put option. Now, going into today, after the gap down in gold, just looking at it, the calendar spread itself, the put calendar spread, even though the market went down as much as it did, and looking at it, it was down like 12 cents, something along those lines. So this is an example of where being short a covered call would have been a better trade to be in. Obviously, that's the benefit of hindsight, but such is life. So with that in mind, What did we do to adjust it? Why did we do it? When did we do it? That type of thing. Now, the first thing that we did was we got out of the December week 2 121 put that we were short. Reason being, there was like maybe a penny of extrinsic value in it at most. I have no reason to be short options when there's no extrinsic value in them. So that's just one of my personal rules, unless you're trying to overcome some type of a margin issue in some way, shape, or form. And even then, I don't think it makes sense. There's really no reason to be short an option if there's no extrinsic value in it. So step one, I got out of that. Now, from there, what I did was I sold the December monthly, which is next week, 118 put. And overall, by doing that trade, I did that for, I believe it was $1.20 debit. Now, I'm fine with taking on a debit to do a roll down like that because of the fact that initially I got into the short 121 put for a credit of 53 cents. And so by doing a $1.20 debit, let's say that in theory, let's go to the expiration day graph now. In theory, we expire right at 118.01, and my December 118 put expires worthless. At that stage, all I need to do the following week is sell another 70-cent option, and I'll be ahead of the game in terms of taking in premium. I'm not counting on that happening by any means, but I just kind of want to give you an idea of it, is that debit roll, it's okay to roll for a debit at times based upon what you're trying to do. Now, with that, you might say, well, what's the ultimate objective of this, Mike? Typically, in the overall position delta of what I'm trying to do with this gold position between the calendar spread, the long put, and the 100 shares of long stock, what I'm trying to do is have a position delta of around the 70 level. And that's something that sometimes it's going to be a little bit more, sometimes it's going to be a little less, such is life. And then the other thing I'm always trying to do with it is making it so we have a positive theta number. I don't want to be charged for this hedge with which we have on. So long as I have those things in place, I'm a happy guy. So the next step of what I would usually do at this stage would be to roll down the January 115 put. That's the put that's saving our bacon. That's the one that's going to, if for some reason gold goes down 20 points like it did, if GLD goes down 20 points and we have a major gap down like we did a few months back, if that's the case, that's what's going to save our bacon. Now, with that, by doing nothing and taking no action, this position, as I'm looking at it right now, is a 50 delta. Now, the flip side of this, if I wanted to make this into a 70 delta again, what I would have done is rolled the January 115 put down to the January 108 put. I'm doing this on my screen right now, and that gets it right at a 71 delta. This is what the decision with which I wrestled with and made today as to why I did that. So the question then becomes, Mike, why did you keep the 115 put, and why are you keeping less deltas on the table by doing this? If gold snaps back tomorrow, you're going to be in trouble, so to speak. Well, first off, if gold does snap back tomorrow, I won't be in trouble. And here's why I say that. The reason is that let's look at the actual pricing difference between the 115 put and the 108 put for January. Right now it's at $1.72 for the Jan 115 puts. The Jan 108 puts are at 58 cents. So for roughly $1.15, let's say, that's how much of a credit I would get had I rolled down to the 108 puts. Now, there's two reasons with which I didn't do it. Reason number one, I think that I would not put on a bull put spread right now, meaning I would not sell the 115 put and I would not buy the 108 put as just a general trade. Reason being, we do have a little bit of uncertainty coming out next week, and if the Fed does run a fake punt, football analogy intended, as for Mr. Longo's benefit, if that is the case and the market does go down, or if they don't run a fake punt, whatever the case may be, if gold continues to go down for whatever reason, then that's not really a spot with which we want to be. Now, once again, I'm long-term bullish, short-term cautious, and the bottom line is this. For $1.20, I'm comfortable keeping that extra 7 points of protection over the course of the next week or so. I feel that it's the wise thing to do. And on top of that, no, I don't have the same deltas to the upside, but for an extra $1.20, I can have that extra protection, and I still have positive theta when doing this. So long story short, even though my delta is not the same, this is the kind of delta with which what's holding back that delta from being a 70 delta to being down to 50 delta is just $1.20 in that 115 put. So if gold does go up, I'm not going to be hurt by 20 deltas for long because of the fact that the market itself is going, GLD itself is going to take the position to the stratosphere, so to speak. Okay, maybe it won't. But my point is that the pain is only going to exist in that 115 put for about $2 or $3 to the upside in GLD. I'm very comfortable with that risk. So this is an example of where you really need to make decisions as to why you're doing certain things and not just look at the numbers. The numbers are extremely important, and what I'd recommend to everyone out there, if you have an Options Express account, use that trade calculator and look at your position delta, theta, gamma, vega, rho. Use that tool. I used to use the trade calculator all the time, and by doing that, it helps you as a tool to make your decisions on what you're doing with the overall position. And that is one to grow on.
Well said, sir. A lot of doing stuff this week, so interesting stuff to share with our listeners. Good stuff. Thank you for that, Uncle Mike. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching for the rest of this week and into the coming weeks. And quite frankly, there isn't a whole heck of a lot. We had non-farms last week, and that was kind of the last glimmer of hope that a lot of people had that were looking for some sort of injection of vol into this marketplace. We didn't really get it. Had a little bit coming in today off of the sell-off, but really there's not a whole heck of a lot on the horizon that seems poised to inject any sort of volatility into this marketplace. Of course, the Fed is looming, but I don't think anyone really expects a whole heck of a lot out of the Fed at this point. Everyone's expecting them to punt into Q1 at the very least. So I suppose they could surprise us all, in which case that would bring a whole heck of a lot of vol to the marketplace really quick. But aside from that one delta option, there's not a whole heck of a lot really cooking. Mr. Andrew, what are you watching for the rest of this week?
We actually were long volatility the whole week on just this FOMC thing, and we sold 95% of it today. I think now Mark and I almost disagree on this. Mark S., he's like looking at the Treasury market like they're really not selling it off, so they're probably not going to taper. But there's, the equity market are usually most of the nervous ninnies are there. And they did bring some volatility. I mean, VIX went from 13 to 16 this week, so that's not nothing. But it looks like it's sort of petered out today. The vol rally and vol we'll see tomorrow. But that's kind of what we're sort of aiming for. To be honest, I think after Wednesday we could see 1.5% move easy intraday after whatever the FOMC says, whatever minutes they throw upon us. But that's all I'm looking at. And the continual implosion of gold. If anything, looks like if the Fed actually does taper, it hurts gold the most. And that's, I think, why it's kind of suffering a little bit the last couple of days.
All right. And then Mr. Tosaw, what are you watching for the rest of this week, sir?
Well, I'm watching, like you said, I want to make sure that nothing crazy happens at this stage in case the Fed in case the Fed runs the fake punt. We're keeping the punt safe team on the field. We're not trying to get a return on this. We're keeping the punt. We're keeping our defense on the field for now.
Must it always be a football analogy with you, sir?
You guys started it by saying the punt. I couldn't resist. We're going punt safe on fourth down.
Next show, I want a baseball analogy or something out of you, just to mix it up a little. Maybe cricket. Let's go deep.
Well, you just said go deep, like in football. You got to throw.
Yes, sir.
It is not me that does the football analogies.
I just set you up. That's my fault. All right, and last but not least, Mr. Alex, what are you watching for the rest of this week, sir?
Watching the 10-year, watching the volatility in the major Western economy 10 years. The realized vol is popped in all of them. Man, the German 10 years trading a 20 realized vol. The UK is trading about an 18 realized vol. We're about a 15, 16. So we're actually seeing about as much vol in 10 years. We're seeing in the S&P. As I said, down 8 days on a 9. Last Friday we had a little resurrection. Hopefully we'll see some resurrection tomorrow. But this time of the year, these kind of volume levels, things are thin. Things are going to move a little more. So be a little bit cautious.
All right, and that's going to do it for Around the Block. That's also all the time we have for this episode of the Option Block. But before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. G. What's coming up in the land of the pit?
Coming up at Option Pit, we got nothing coming up, although we are relaunching it. We are going to relaunch a service in January. Look for that. And also, the program we did on Saturday, I don't want to toot our horns, but we got a lot of positive feedback from clients. Any of you that did not hear it actually want to learn about options, how to actually trade options, come away with useful ideas that you could actually employ yourself. I thought that was one of the better. That was a very dense 3-hour webinar of information.
We covered a lot of ground in 3+ hours.
Yeah, it would save what it costs. You can go buy it, buy the recordings now or something for $100 and something bucks. You could easily make that money or save that money after you look at this. It's a pretty nice resource, I think. But I know because I was there giving the presentation, I'm tooting my own horn, but sometimes if I do something that sucks, I would tell you, but I thought this one was pretty good.
Yeah, a lot of you guys writing in asking how you can get access to that. It's still up there, the recordings. You can go register for the event and get access to all of that, including all of the mega stuff we're in the process of uploading now for the Unusual Activity Forum. I think last check was 15 gigabytes worth of video and other materials from that presentation on top of all the dense stuff we did this past weekend in the Epic Educational Spectacular. That was pretty fun, so I encourage you, if you haven't checked that out yet, head on over to theoptionsinsider.com/events. That link is still up there, or you can find it on Option Pit and register and get access to all those great recordings, because that's many, many hours worth of dense educational material at your fingertips.
It is. I did my doing stuff with Long Premium. Mark did his butterflies, which he, uses on a daily basis at a fairly large fund. Seems to be working out okay. So it's a lot of good stuff, I thought, in there.
All right. And next up, what is cooking in the land of RCM Wealth Advisors? Mr. Uncle Mike Tosaw.
Well, as per usual, we're getting ready to celebrate the holidays with our families, and some people already have, depending on which holidays they celebrate. But with that in mind, we're excited about the coming new year. We really believe that 2014 is going to be the best year yet for our firm, for our clients, for our investors, and everyone involved. So stay tuned, folks. January is coming.
And last but certainly not least, Mr. Viceroy, what is coming up in the land of OX?
A little bit of a wind down, but still a decent webinar schedule. Our last live event is this Saturday, 9 o'clock Eastern in St. Petersburg, Florida. Jimmy Ruzan, former Group 1 market maker. If you're not near St. Pete, you can come to the site, optionsexpress.com, click on the education tab, and you can register for the event. You don't need to be a customer. All the education offerings are free. They're ahead of the login. One other webinar showcase Wednesday, my good buddy Dan Gramza from the CME will be doing Elliott Wave, Insight and Techniques for the Futures Market. But we wind down a little, but there's still a full schedule. And as I say, if you want to see the schedule, come to the site, click on the education tab. One reminder, still doing the $150 Amazon gift card. And again, come to the site, come to optionsexpress.com for details on the Amazon offering. Click on the Amazon gift card. There are a couple terms and conditions, 10 trades, 90 days, a couple other conditions have to be met. But that's up there. That will be up there through the first quarter of 2014. And as Mike said, coming into the holidays here and time for family and kind of kick back a bit.
And no, Andrew, stop asking. You are not eligible for the $150 credit, so you can stop asking now. And it's always funny, Mr. Viceroy, how once the weather starts turning a little bit chilly up here in Chicago, those webinars seem to start heading to the south. Or the seminars, I should say. Funny how that works.
When I worked at SIBO, the entire winter was not the education side, but the marketing team just seemed to take place in cities that had some of the best golf courses and the best weather. In fact, we used to call the marketing group at SIBO the traveling golf team. The head of marketing was a scratch golfer, and that was part of his repertoire. But
that's what you want in a good marketer.
I'm sorry?
So that's what you want in a good marketer, scratch golfer.
Yeah, absolutely.
All right, and on behalf of Alex and Andrew and Uncle Mike and, of course, myself, I want to thank all of you guys in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.